Yo, yo, yo. Bit of myth busting today. Welcome. Happy New Year. We say, honestly, it's getting boring, Baz. We say this all the time.
I don't know what that was there.
That's the new,
kind of gangster
that's
rap.
the new us. We are back for episode 18.
Is it 18?
It is
or is
18.
It,
God
is
knows,
it 18
but
or is it
it's
19?
18 on paper. That's all that matters.
Okay.
18 on paper.
There's been a few lost episodes. There's been a few other bits and bobs happened. But anyway.
We have, yeah. But this is the first one in the new year. And we finished off last year, which was great, I thought, when we had episode 17, which is Baz Doesn't Listen. It was basically mortgage quiz of the year. And you did, I can't remember the overall score, but you did
everything.
well.
I got every one of them right.
Yeah, so just like we did on the last one, we didn't really have 3 questions to go back on that. But how have you been? How have you been, mate, since?
All right, I think. Just manic Christmas, manic. Well, that's just manic at the minute. Way of life, isn't it? I think for everyone, but
it's a crazy busy, uncertain time of the year.
And weather doesn't help, and just everything else, isn't it? Really, it's just a busy time. I think it's weird though, because I do feel like we're coming out the other side of it now.
I do. I think it's, even though we've just had a snowstorm the last couple of days and the weather's been horrific, I just think that every now and again when them clouds break, we're going to get some sunshine and we're going to
it's good.
We're going to get some, I don't know, hopefully a good year.
Yep.
Fingers crossed. It seems positive in the media, and I don't just look at finance, and I'm thinking of everything else. As in, I see it as the media have got used to us whinging about them because they're horrific. That doesn't mean that things aren't happening that we're not knowing about, but I think they've stopped trying to portray it always in a negative because we're having a backlash to the media. I think they know that the people are going to turn away from the media and just want facts and sometimes good news. So I'm hoping that's what it is. In terms of what I mean by that is, I hope that we're just going to have a good year. But as we know, one day can change the world.
The media and that, though, it's just, we're fighting on so many fronts. It's like the whole economic thing. It's obviously the whole winter thing. Then you've got all the tension of like the different world events and stuff. And I think it's just been a worrying time. It still is a worrying time, obviously, but I think a nice bit of positivity wouldn't go amiss at the minute.
I mean, it might be the medium. I've switched from kind of Sky News to GB News. That's made a difference because I mean, sometimes I can get irate about them grilling a positive agenda and trying to find one negative in it. And like obviously when they attack Rishi, I mean, he's a politician. He's meant to, but they skip over something positive that he's done and get straight on a negative. And I think if you stay away from that poisonous side of the media and read the facts, and there's some horrific facts, but it's just, you don't need that prolonged stuff on something that's irrelevant. No. I don't care if a politician slips up and says the wrong word and then he's getting dragged over the coals for it, or she's getting dragged over the coals for it, and then 3 days until she basically, it's career suicide and they want her to step down or he step down. Whereas, but then there's a bigger thing. There's like wars in Yemen going on, and they don't go to town on that, but they'll grill someone for something so little. Yeah, so that's why I've switched media. And GB News, and I'm not trying to plug it, but it gives you a different set. I've stopped listening to the news in the morning, so I'm probably oblivious to what's going on. But but I'm listening to like more of Steve Bartlett. I'm listening to more Joe Rogan in the morning with me brew podcast. Boom, straight on, and like.
It sometimes helps that having someone to digest it for you and put there, if it's someone you trust, you think you're like-minded, I think it's quite good sometimes to get their spin on it, but you've just got to take everything with a pinch of salt.
Yeah, there's another good podcast. It's called the News Agents.
Right.
And I think it's actually Fiona, the one who interviewed Prince Andrew. But they do that. Yeah. They spin the news in a bullshit-free fashion, which is fantastic. Right. But yeah, because
it's not as good as this podcast, but it's
no. But you don't need 24/7 news because that's depressing. What you need is what happened in the world that I need to know about. This, and this.
But this is where the world changed when Sky News and that came around, when it was 24/7.
Well,
it used to be 6 o'clock, 9 o'clock.
Inflation figures, mate, and it kind of links into the new podcast. But inflation figures, they came down a lot. Let's say by 2%. Okay, then they went up by 0.1%, and they're probably going to come down again by a whole percent. So you could say over 2 months it's came down nearly, say, 3%. But the media, that tiny little spike, just like you would if you weight loss, that you'll lose, gain, lose, gain. Yeah, they literally went to town on it. And the markets reacted, like rates went back up a little bit because of this. It's going to come back down. But it's the media twist on that. Inflation has risen. It hasn't. It's still coming down from where it was.
It's like sensations. It's a bit like the old red top papers, and now your national news, aren't they? It's weird.
It is, it's a good point if you put it like that. But going back to what you just said there about weight loss, and like that's like me congratulating you for losing weight.
Thanks.
6 months in a row, you putting a pound on in the scales, and me saying Baz has gained a bit of weight, like, and not concentrating on the 6 stone you've lost. Yeah. You know what I mean? Anyway,
it is, yeah. So I just think there's so much going on. I think hopefully. It'd be nice to think we all had a good year for once. The last few years, there's been just so many kicks in the teeth for everyone, hasn't there?
And on the mortgage side, I'm hoping this podcast might get the message across, which will definitely give people some good news and also a bit of peace of mind and less sleepless nights. So the podcast title for the myth bust today is remortgage based, and we're going to have the myth is you have ages left. Leave it till the lastminute.com for remortgaging. Okay, I'm doing a blog on this subject. The kids have done a few kind of TikToks. I don't know if you've been following them, but the kids are getting really good at the acting. But I'm harping on at this, and I've done this blind with you. We don't ever script these podcasts. We have a title. You normally come armed with your 3 questions from the previous podcast once you've re-listened to it. I never listen to them again. I do. I listen to them all the time. Just because I'm vain. But you listen, because you edit and produce them. Like, obviously, you go back over them. But my question to you is, okay, remortgaging.
Yeah.
You've already got a mortgage.
Yeah.
That mortgage that you've got is coming to the end.
Yeah.
In 6 months. When do you speak to us?
It's coming to the end in 6 months.
6 months.
Are you talking about in reality?
You've got no worry. Nothing is going to happen to your mortgage for another 6 months. You've got 6 months till your fixed rate comes to an end. When should you speak to us?
I kind of guess what you're going to say. So I would say you're probably thinking I should be coming to you in 6 months. 6 months before, but in reality, I definitely wouldn't. You wouldn't.
So if I change my question, when should you have got in touch with us? You have 6 months off, exactly 180 days from that mortgage coming to an end. When should you have started the process?
I would say as early as possible. I'd say 6 months. But obviously, as we've said on loads of other podcasts, fluctuations. You might be able to tell me, oh yeah, we've got all the ducks in a row, and you're looking at X amount %. But come 6 months down the line, when I am actually remortgaging, be totally different.
Yeah.
So I don't. Yeah. So it's like a double-edged sword, isn't it? I suppose.
It's kind of a trick question. I did a poll on LinkedIn. Brilliant for polls. Yeah. We haven't got a huge following on LinkedIn, about 10,000 on there.
10,000 following.
10,000 connections, it's called. Yeah.
I've rarely used it myself.
It's pretty decent because it's all professionals. I'm not saying people aren't, but you're on there for a reason and to read articles. Whereas on Facebook, you're on there to keep up with family. Yes. So this, in particular, I put a poll on, and it was when should you remortgage? And I asked the same question I've just asked you, and I give options of lastminute.com, 3 months, 6 months, 7 months. Majority of people said 6. Some people said 3. And there's a reason for that, and I'll get to that in a bit. A lot of people said lastminute.com. I like them because they're just honest. Yeah. And that's very you.
That's me. That's exactly how we do.
Bearing in mind how bloody organised and anal you can be, that's nuts. But again,
with stuff I can control, stuff like that. Yeah,
well, how considering how picky I am and how bad my grammar and messages can be. Yeah. Like, but I'd pick you up on like a line being a different colour or whatever.
That's why I work so well together in a podcast giants.
And then, like I say, the other option was 7 months, and a few people ticked that. And a couple of customers said...
Right, so they were my options. So
7, 6, 3, or last minute. When should you start the process?
First of all, is it not? Do you not? Right, let me try and get... I think you needed 3 months bank statements, that we said in the past, for things. So 3 months, so you wouldn't really be able to get... But now you said 7, I'm thinking you're
Well, the answer's 7, yeah.
Is it?
So,
Why is that?
And I'll tell you why.
All right. Go
So, the TikTok video the kids did, you didn't listen to it in full, did you?
Which one? There was
The one where
we
we,
were walking.
the remortgaging one. So the one where we were sat on the sofa. So how I explained it to Emmy was, if I said to Emmy when we're going somewhere, and I said,
yeah, I do remember this one.
said, Emmy, go and put your shoes on, we're going.
Yeah.
Okay? But if I said, Emmy, will you put your shoes on in 10 minutes because we need to go? She wouldn't come in 10 minutes.
Yeah, exactly. Yeah.
So I would say, Emmy, get your shoes on. She'd get shoes on. Go brush teeth. Brush teeth. Don't know why in that order.
And then knowing your daughter, there's no chance she'd listen to you anyway. But go on.
But then when we need to leave, we're ready.
Yes.
That was my point. And when you flip that into the remortgage world or the mortgage world, I want you to start the process in 7 months. You don't have to get your bank statements. You don't have to do anything of that. All you have to do is touch base. That's with your existing lender or us. Okay? The reason for that is because in 1 month's time, you're eligible to select your new product for your next milestone of your mortgage.
Right. So is that not like early
So you have an early repayment charge if you pay your mortgage off before a certain date, which is 6 months away. I'm not saying to you, change your mortgage today, 6 months early. I'm saying, let's pick your new mortgage for 6 months' time. And when 6 months' time comes, that's the mortgage that's going to start.
But what if things change drastically? What if the interest rate goes right down?
Brilliant.
You were going to get a fixed rate.
Perfect. Good answer. Good question, sorry. So the 7 month point, too early to do anything, because we can't submit the application 7 months away because the offer is only valid for 6 and it would negate it.
Oh, right. So that's
and like you were getting on with the bank statement, so you would almost have your bank
bank
statements would be expired because we need new ones.
So the offer usually stands for 6 months, is what you're saying.
Yeah, for a remortgage, if we get you that offer today, it would be ready for when you complete. Also, you don't normally remortgage today and get your offer today. There's a bit of processing to take place, but we keep like, if we get into the minuscule bits and very minor detail, it's very complicated. We try and take that away. So all I'm saying is either your bank or me and the team, what we'll do is, if we speak to you 7 months before, all we're going to do is, we're going to give you a little crib sheet, which obviously all you've done is put it together, designed it for us, and not read and digested it, Baz.
Definitely.
Because that crib sheet goes out to them to say, what do I need to know for 1 month's time? And you need to be prepared for this, this,
a month's grace period to get your stuff ready.
Get your shit together, aye. And it's what to expect, because all you'll do is panic until that day. So rather than, if you ring your bank and say, can I speak to you about my mortgage? You can't until the 6 month point. Okay, well, that's not very helpful. I'm worried about what if. So we might speak to you early, take all of your details. We won't start collecting documents because, like I said, they're going to be out of date. But at least we know the plan that we're going to put in place in 6 months' time.
So could you give a snapshot of what they could
yes,
do
but that's where you're right, because rates might come down in that period, or they might go up.
Yeah, but it's a snapshot of that time.
Snapshot.
Right.
But at the 6 month point, we can execute that transaction and say, this is your mortgage. We've put it in, submitted, you've locked this rate in, it's yours when it comes to 6 months' time.
So I'm going for a tracker. No, if I'm going for a fixed rate, right?
Yep.
5%, say.
Yep.
In 6 months' time, so you've processed that, and everything else has happened in the meantime. In 6 months' time, when it comes to actually it being ready, interest rates have gone right up. That product's no longer available. Have I still got it?
You've locked it in. Yeah.
Still got it.
Correct.
Oh, okay.
We've got you that product.
Alternatively,
if it goes down,
things have gone a better way. You would then change me onto what's better.
Just grab it. Yeah. Each time, grab it. But
I don't know if you wanted me to jump in here. You said in 7 months' time. In 7 months. At 7 months before my remortgage is due, to contact you, right?
We have a chat. Yeah.
But we've done umpteen podcasts before, and I've worked loads and loads tirelessly on getting your internal system application working perfectly for you. And you've always said, sit back, relax, you've got your mortgage. We'll contact you
6 months out
beforehand.
Yeah. And that's
so is that a fail safe?
So 6 months is the kind of, in my opinion, the latest you want to leave it. 6 months is D-Day. That is the day that you can transact and select the new rate. Okay. So if I speak to you on the 180th day before your mortgage comes to an end, we have a chat. Baz, what do you want to do?
Yeah.
Could you let us know your income? Don't know it. Go and get it. Tomorrow you come. Day 179. The rate I had yesterday that I could have locked in at 4% is now 4.2. Whereas at 7 month point, we're not really going to get nitty gritty on rates. I'm going to tell you where there or thereabouts it is. So I'll give you a margin as opposed to a rate. About this much monthly payment, Baz. Okay, I'm happy with that. Or I'm not happy with that. What can I do? You could pay 10 grand off. You could extend your term. You could do this. You could do that. Okay, we could change lenders. We could look at doing this. You could sell the property. You could look at buying a new property. You could do, okay, thanks for giving us all my options. By the time it comes to the 6 month point and we lock in, we don't have to go back and forth decision making, potentially risking rates going up.
Right, get you, but on that date, so in that month, the month 7 to 6,
Yeah.
do you then look at bank statements and stuff like that or not? You don't do any, or do you?
So it depends really. That will always make the decision. With a remortgage, you've got two options. And just again, to not have to expand this out to every opportunity that's available at the remortgage point, let's consider this a remortgage where nothing else has changed. You're not moving house, okay?
Stayed the same.
You're not borrowing more. You're not chucking up off a big lump sum. So all we're looking at is where is this mortgage going to go at its next milestone, whether it's another 2 year, 3 year or 5 year fixed. That is going to go either with the same lender that you're with already or a new lender. Okay, with or without.
Yeah.
If it stays with the lender, much simpler process.
Okay. Obviously, because
almost
business and
almost like a click on a button. But to do that, we've still got to go through the documentation, the fact finding process, the advice process. But the lender doesn't look at your stuff to decide yes or no.
Okay.
What the lender does is trust, one, that we've done our job, we'll make the recommendation, and that you're getting the right deal for you. So if you, what we would sort of execute that transaction and you take that deal, that's brilliant. You've got it on that day done. If we go to a new lender, we're going to ask the new lender, can I please have your mortgage instead? Your company being my mortgage company. Yes or no? Right. To do that, send us your bank statement, send us your pay slip. I'm going to look at your house, and I'm going to look at your credit history.
And could they do that? When would they do that? And would that be
so the 6 month point, the application goes in, secures the rate.
Well, you already want that all. You want to know that they've got the bank statements ready. You want to know.
Yeah. Day one, we can't submit that application until we've got 3 months bank statements. And let's say you've missed a page or there's something on there that maybe we can't go to Halifax for. Yeah? So we need to be, during that month period beforehand, looking and going, right, okay, I know what. Wait, Baz, we're not going to go to Santander. We're going to go to HSBC because I've seen that you've got a HSBC credit card you never told us about. That gets you a better rate with them, and therefore we're going to go that way. Right. So on the 180th day, the application goes into HSBC, rates locked in, subject to everything we've said being right. So they're going to look at your bank statements, pay slips, get the calculator out, check your credit history, and then they're going to go and view your property and say, is your house falling down, yes or no? Is it worth what you think it is? Brilliant. Here's your mortgage offer. Okay. They may say one of those 4 things don't tally up. Yeah. And no, you can't have this mortgage.
What about then?
So that's unfortunate. That could happen to you when you're buying a property. So then we would go back to the drawing board. Yeah. But we'd go quick to the drawing board because we'd be saying, right, Baz, we still have this offer on the table from your current lender, which we never click the button on because you don't want two running side by side. You could, but we'll get into that. Yeah. What we're going to do is we're going to actually try Halifax because HSBC was the best, but they said no. But Halifax like your property type better. The problem with that is it's another, yes, please, can we have it? Not, you've already got it on the table with whoever your lender is. And at that point, we would be thinking, okay, let's do this. It's worth trying because we've got 6 months. But still, there's running the risk of what if. Yeah, so we would only go to a brand new lender if financially it made a massive difference to you.
Yeah, obviously, because you're having to go through the
and to me, at the moment, a massive difference is 10 quid a month because that hurts. 10 quid a month increase on Netflix or whatever it was, $7.99 increase. That's huge.
So with that though, you've had it all passed at the 6 month prior to the remortgage period, right? Gone with NatWest. they've said, yeah, we've
Yeah.
locked that in. They would check the bank statements and stuff then. Did they then recheck? Because what happens if it's 6 months, everything's looking rosy, but when it comes to the actual remortgage date, I've had my hours cut, it work.
Would they move the goalpost? So technically, yeah, there's an element of responsibility for everybody to say, look, when I put the application in, I had a job, now I don't. Of course, yeah. Your mortgage offer is a binding offer, and you've got to let them know if things have changed. So that could happen. You've still got then to fall back on your product transfer, because you can have a product transfer if you've lost your job and you've got no income, because that lender has a responsibility to still offer you a rate that's competitive with its new rates
Product
to
transfer
customers.
staying with your own.
Yeah.
Right,
So there is no assessment. There is no assessment on that basis. They won't revisit your property. They won't look at your bank statements, and they won't look at your pay slips, because it's staying with the same lender. You already have a mortgage, so they're not going to give you
it either way. If you're going to default on your mortgage.
Didn't used to happen like this, but yeah, this is now the way that done. They've already got you. Why would they force you out and keep you on a higher rate and say, no, you can't have that rate that everyone else can have, when they've already got you? So even if you have had some bad times, the bad times, the good thing is that there's always that option to you.
Really? See, I thought it would be the other way. They would think, oh shit,
let's get rid.
We've lent you X amount of hundreds of £1,000s. Now we know you've lost your job. This is looking.
We need you off our books. Yeah. No. Luckily, they've got a responsibility as a lender.
So that's a what do you call it? Like a government, like a.
I must put a caveat in there that there's a thing called a mortgage prisoner, and they do exist. So there are lenders out there that don't run and have a business anymore, that wouldn't even offer a product transfer. So like your Northern Rocks and things like that. So you have to be moving away from them regardless.
But that's
different.
But so in effect, that could cause a lot of people to default, a lot of banks to lose money. If it was Baz Bank, going back to my own little bank, you've done this, it's come up for renewal, and then you say to me, I've lost my job, or I've got X amount, my credit card debt's really up here and I've defaulted on these payments. I still have to.
Well, the way I'd see it as Baz, yeah. What I would say is, I'd say, Baz, I've been with you for 5 years now, never missed a payment. I've come across hard times. Is there anything you can do to help us out to get through these times? You also know that you've got security on their house, so you could repossess that property and take it if you wanted to.
So would that happen? What if this happened before? What if this happened 8 months before you're due? You've missed a few payments. Do they still have to?
No, you've got to be. You can't be in arrears when you take out your new product transfer.
Okay, right.
That's the. I mean, don't get us wrong. That it doesn't really make sense, because if you're in arrears and your payments have gone up and you can't get them back down by locking into a lower fixed rate, you're going to be making yourself worse. Yeah. But at that point, that's when people need to not be burying their heads in the sand and speaking to the lender about what they can do.
They might be able to help.
Well, luckily Martin Lewis stepped in and obviously got the mortgage charter put in place, so it makes it a lot easier for people in difficulty. But that still involves the human being that is in trouble admitting it, not burying their head in the sand. And sadly, with your mortgage, they instantly go to thinking about the repossession. And actually the banks are there to help them and support them. Let's not forget, and I'm not digging at the banks here, but Baz banks would have made over 5 years a lot of interest on that, and you've made some money. And really,
it's kind of my security then, isn't it?
It's your house. It's your you.
No, but I mean, as Baz Bank, it's my payment for taking the risk that.
It's not an interest; it's a charge, isn't it? Really, isn't it? But the important thing to realise is it's a mortgage, so they literally can take that property and sell it to get the money back. So
it's interesting though. It's interesting that you said that. Like, I literally thought, well, if things had changed, you could be out on a limb, you could be snookered, you could end up losing your house, but it's not. It's a fact that at least there is that little bit of security there, that it might not be the rate you want or the product you want, but at least there's a chance you're still going to be all right.
Yeah, I mean, and I think Martin Lewis said it when he was talking about credit difficulties, and I know you always quote him, but people trust him, so why wouldn't I? But your mortgage needs to be the one thing that you pay. And it needs to be the last thing that you don't, and if I was to put your car finance before your mortgage, you could argue you need your car to get to work. That's great. You can get to work and you can keep your job, but you've got no roof, and what I mean is that your mortgages should be a priority, and you need to speak to your lender, because even when you speak to your car company because you can't make that payment either, and you explain you've got a mortgage, they will never tell you to pay your car before the mortgage.
Right.
You know,
Right.
and I mean, I'd put food in my kids' mouths before I paid my mortgage. You would, but in the longer term, you're gonna have no house. So it's one of these where lenders have got to be sensible, and it's nice for you to talk to us like this, but go back 15 years, Baz, this wasn't the case. It was tough shit. You know,
Terrifying, really, isn't it? Because if we think of how bad it's got now, financially,
the best thing that happened is the banks made mistakes. The banks were the ones that caused the crash, and they were not the good guys. Whereas, so when they lost money because they did naughty things with our money, then actually they got what they deserved. So there was a lot of repossessions that happened. Obviously, there's people out there that just don't turn up at work, don't pay bills. That's given in any walk of life. But what I mean is the banks were not innocent. They went bust, they misinvested, and they caused the financial crash. This time's completely different, but the banks understand they're not going to be, surprisingly, they're not pointing fingers saying...
They're not holier than thou.
They're not, right? Perfect way of putting it. And that's quite good, because if it didn't happen, you'd be forever in fear. I'm not saying that they still won't repossess a property, but in the grand scheme of things, that little one problem and the little bit of money the bank's losing, they're a lot more willing now to work with you. And I've seen it, actually. I've seen the emails to send out when people, especially if there's mental health involved, and mental health is caused by finance. It's not like you have a mental health issue and then you can't. This is me saying, if someone's struggling with money, that can bring on the mental health problem, can force someone into suicide. The banks are conscious that they have to treat them vulnerably instantly and offer them bags and bags of support.
Right.
And that just needs to be peace of mind. And it's
brilliant, that, though, isn't it? Really?
It is, but we're saying that when actually it should be just a given, shouldn't it?
Well, yeah.
You know,
should be, shouldn't it? But how far we've come, I think is quite. It does. I know we look back at it in different ways.
So if you spoke to me 6 months out, the point here is,
this.
You've wasted a month. I'm not early doors, so we don't have to go back and forth. If we set the scene at 7 months, you can actually get peace of mind, because you might go, oh, I'm nearly missing mortgage payments. I know my rate's going to go up. I've been gambling heavily. I've had really bad times. I'm over my overdraft and I missed my credit card payment. I don't know what I'm going to do. Actually, what you can do is, I can get you this rate with Halifax in a month's time. What we need to do that is get your passport in. We'll get it ready. I'm going to update your notes. Then I'm going to touch base with you just before, get you okay, and then I'm going to submit it, lock it in, done. And if the rate comes down, you win, because you've got the worst rate you're going to get. It will not go up. Yeah. And let's go back to October 2022.
When it did go up.
When it went up ridiculously. Right. If you hadn't locked in and you'd waited till 2 months before, you'd missed out on a massive rate reduction. It used to be, though, Baz, 3 months was the common.
And why has it changed then?
Why has it changed? Competition. Some lenders would let you do it 6 months before.
And then everyone else, then people prefer going to them, so then...
Then some did 3. Right. Then some lenders, there is lenders now still that do not allow you to remortgage with them, the product transfer route, till 3 months before. Yorkshire Building Society, Accord being one of them.
So if that's the case, you'd go to you 4 months before?
Well, you'd go to me 7 months before, sorry.
And then check that and then come back?
We may, if we can, get you a new one at 6 months. So we'll take you away from Accord, because they're not going to give you something to put on the table. What will happen then, though, is when it comes to 3 months out, if Accord say, but we would give you this, we're not going to not tell the customer that.
What happens then? Can you cancel the one that you'd already had?
Sometimes, yes. And trust me, it's not as easy as cancelling it, but yeah, we can. Same as we keep an eye on the market. Now, you've got to understand we're a business, and we spend the majority of our time at the moment doing these product changes, rate switches. So sometimes it's 10 times in that 6 months that we will change the rate for you to get it down, right? You want us to do that. Banks don't drop for anything less than 0.1. So you've got a whole % down. That was worthwhile doing it for you, of course. But there is times where in between that, HSBC hit the headlines and we've got a rate of 3.99. Baz is stuck on a 4.5. Halifax haven't moved 4.5. Probably not going to. You want that one? Why can't I have it? There's a timeline when you can't have it, because we've got to then value your property, get it reassessed, where it would be too much of a punt to try and go elsewhere.
Sometimes.
So we've got to be realistic. Sometimes you take it on the chin, yeah. But that's the same if you're buying a house, right? You're buying a house today, you fell in love with it, you picked your kitchen, you've gone in, you're waiting for the keys, 3 weeks out, lo and behold, you're at the bus stop. You look at the advertisement, Santander bringing out a 3.2, you've only got a 3.4. Tough. Tough. You're not going to switch at that point.
No.
Risk your property, which you've already got a mortgage offer for, already done the legals for, already had the property valued, already had your case assessed, probably paid your fees.
Write it off then, stop looking.
Yeah.
It's like going to buy a telly.
Yeah.
You buy it, or Amazon Prime or whatever.
Well, you don't go in the January sales and check, I mean, you probably would, how much was the TV I bought.
No, but you know what I mean? If you buy something and then you see the advert pop up, you would be kicking yourself, but then you think, well, I still got it, what I was happy to pay for it, in effect. So the takeaway really from it all, though, is
be prepared.
Early.
Be prepared.
Well, no, I'm going to go better than that.
What?
The legend that is Roy Keane. Fail to prepare to fail. What do you think of that?
When did he say that?
He had that up on the wall in the changing rooms when he was.
Did he?
When he was manager of the best team.
I didn't know it was him. I always thought it was my mate Bawley that came up with that quote.
No,
and
it's sure it was Roy Keane. If you pulled me up on a Sunderland,
it's a very military term as well.
No, but it's true though. I know it's different in this because prepare fails. It's a bit over the top kind of thing, but it is true.
So what we're saying to you is,
gets it off your mental load, gets it off.
What we're trying to put a spin on this is, don't leave it till 6 months and say, Paddy, I need a chat because I can lock in now. I've seen a rate of this, because we're not going to get you in and get your documents prepared in time for that rate. And if it does drop, you'll feel like we've let you down.
But also, 6 months is better than coming in 3 months.
Oh yeah.
So
totally. I mean, but 7 months, we email, because we've set the system now, between 180 and 210 days, catches them, let's email them out, let's get ready.
210, 7 months.
Yeah.
So that's why you've put that in. Yeah. Right, so this, for all our listeners at home, this is a section of Paddy's app, which he has, which is a renewal section, which flags up different customers that are due to be you have it in 6 different sections, so you have...
Blocks, that's more for us to see in years who's coming.
It was at one point 0 to 180 days.
Yeah.
I think that's what it was to the renewal. But then you changed it at one point, I remember that, from 180 to 210. I think it is a section.
It actually used to, I think it used to be like 0 to 90, 90 to 180.
Yes. But there wasn't.
And now there wasn't. So we need to capture those. That's what that's for. It is exactly that.
See, this is the thing for me. I do the technical side, the background of the app.
With no idea why.
I don't. Yeah. No, but like truthfully, for me, it makes sense now. If you'd have said 1 at 7 months, 7 is such a strange number.
And we could go 8, but what we've actually realised, and we're going to really launch this campaign, which already really existed. You probably can't remember, but you see them. Sorry for the non-visuals, but they already have a mortgage. Let's take a closer look at it.
Yep.
That flyer is a brilliant tool, because even if your mortgage is 21 months away, why not get in touch?
It's almost like...
Don't have to talk about it now.
Yeah.
I've got a mortgage, Paddy. Yeah. I want you to look after it when it comes in 21 months' time.
Put them on the system.
7 months, we get in touch. We have a bit crack. We send them the automated documents. We put their mind at ease. And at the 6 month point, we're ready to go. We can offer that service to every single person in the UK who has a mortgage. Done.
But it's kind of like, it's like for us at home, well, you know yourself, life's manic, isn't it? When you've got kids, when you're a bit older, when you've got stuff going on. But having another thing that you can cross off your to-do list or cross off the calendar, if you can do that a month early.
Well, imagine. So I know it's probably not going to happen because you haven't got a fleet of cars. But you know your car insurance is coming for renewal when you start getting spammed a bit on your emails, and you think, when does it end?
The thing that catches us out is MOT.
Yeah.
Because we have it on the calendar. What we've started doing now is putting it a month before in the calendar, so we know that it's coming up, and then you've got to...
So imagine if you had a broker who did your everything to do with your car. Let's not say MOT, but car insurance.
Would chase me up.
But also knowing that you're going to get the best deal, because a month before they're going to have a bit quick chat and go, Baz, have you been naughty? Have you any speeding, any this? No, that cool, blah, 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 blah. No, change jobs. No. Are you now a stunt double or anything like that? No, no. Let's go. Here's your quotes. You're not going to question it because I trust you. You're an advisor. Put it in place. Job done. You're never going to get caught out. You shouldn't. Customers still do, and they will do. But HSBC have this one. Tough, you can't have it. You can't have that rate because your hair colour's different. Whereas you wouldn't be coming to us to say, have you tried the multi-policy? I was speaking to Clive down the pub and he says, no, we have got you back. And we have to be blunt with people and say, no, it doesn't exist. But it doesn't matter. Halifax, me and you could be twins with very, very similar lifestyle, spending habits and income, and we will get offered a different rate by Halifax to stay with them than each other. It's so unique to the customer.
So is that like an algorithm?
That wouldn't happen, don't know. It's a clever system. It's all about online open banking. And to be honest, it's the way that they see a good customer and they award their individual points internally you get like a better way. That doesn't happen for the likes of like HSBC. You just get given whatever the products are for your threshold. Obviously your valuation of your property matters. Because you might want a physical valuation. You might not want your lender to say your house is worth this at a click of a button. You might say, well, I've spent £500 on my new this, £500 on that. I've spent £2,000 on this, and I want them to come out and see what I've done. Okay, well, that's when we would go to a new lender. Okay. So in a way, what this podcast's about is don't leave it to the last minute. 6 months rule is out the window. You probably even heard of the 3 month rule, but hopefully 6 months is getting through. So I'm glad that was a popular answer. 3 months was common enough so that people probably didn't know. Yeah. Lenders themselves will write to you at about 6 month point now, but that used to be 3. NatWest always jumped the gun and emailed you 4.
Right.
So they will be emailing you 7. So why are we not doing it?
Exactly.
But what I'm trying to say and reach out to customers is, why do you have to wait till 7? Put us in your database, because what we do is I get a missed call on my phone on Friday afternoon. I pass it to the guys. They ring them. Can't get them booked into the Wednesday. But they've had that same issue with the bank. Whereas if they're in the system as a customer, we'd have already messaged them on 7 months. Here's some dates. When do you want it? I'll have this day, please, Paddy. Done. On that day, we will be ready to move forward, because we'll be saying, right, next week, you've got these options with you. That gives you time to go back and forth with us and also your partner, and to be able to say, Paddy, could you try this? What if we wanted to borrow an extra 10 grand? What if we wanted to do this? And then on the day we can execute, which is the 6 month, 180 day, we can put in the application at the earliest opportunity.
So none of this, I know I keep harking back to the system and how good it is and how it worked before. That must have been a nightmare when you were paper-based, or when you were, before you had the system to do it. Well, the system does it for you now.
So Laura was the system. So what I used to have in front of me was a big black filing cabinet, heavy piece of kit, green files, you know, the arch and that slide along, the little plastic things. What was a nightmare was if that white bit of paper fell out. So we actually had to, honestly, we used to have to sellotape around it, because that said April 23. Sorry, it would have said April 19.
So
and
that
when
means...
so what used to happen is we used to put the end date. So if you took a 2-year mortgage out now, the end date would be Feb 26. So there would be a green folder, a green file holder in the cabinet with Feb 26 on it. When your mortgage completed, it would get slotted into that in a brown folder, and that would move over the years like this, because at the front, honestly, Laura used to manage it, and every now and again she'd find one that had slipped, fell out the back, and would move, or the white thing had fell off.
Well, that's what the system does for you.
Exactly.
But the system also lets you...
And honestly, we need now, what did that hold? 100 each rack, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we'd need 4 of those things. I'd need a bigger building just for that. And then that's a full-time job to manage it. This is when I say, and that's just one thing the system does, not the other 100 things it does. So that's when I say it's a staff member. It is, you know, and not only that, we can actually put some quite good things in there. We can pre-populate the forms. We can pull off the old voice clip. We can pull off the old, because trust me, you got this many customers, you do forget. Some customers stand out. Family, brilliant, but you can't remember their income, the situation, even kids' names, you know what I mean? Things like that. You're like, oh, great, okay. And all of that is in your database. And it's good to bring it forward. It's also good to bring their intentions. And mid-time, Paddy, I've had 10 kids out of the blue, and I need new life insurance. When we get to see you, we don't have to go, so have you got 10 more? Yeah, I told you that halfway. We interlink your file. Also, guys, we always talk about remortgaging. things get in the way of that. So sometimes we're in the middle of the mortgage, 3 years into a 5-year fixed, you might want to move. So it's not always about that. And that's can link to another podcast that we want to do with the estate agents and like tips on how to get prepared. Because a purchase shouldn't just be about seeing a house, I want to do it. It should, a remortgage should be, you're in Paddy's hands, you're safe. You're in your lender's hands and you're safe for just their products.
Yes.
If you've got a change of circumstances, you might not fit that lender. You speak to your lender and say, but I want to borrow 10 grand more. You can't. So, okay. Baz turns to Eleanor, I can't build the extension now. All right, well, that's a shame. She was going to set up a business. That was going to change the world. And then suddenly, care for you, but you were going to come the best drummer in the world. And then suddenly Dave Grohl puts his drumsticks up and you take over Foo Fighters. Is he a drummer?
Yeah.
Foo Fighters?
No,
he's not. Is he?
He's very good in Nirvana now, but anyway.
Yeah, but anyway, I was close there.
Yeah, he's in Foo Fighters, obviously, but yeah.
No,
anyway,
yeah.
he probably did do the drums on something else. Right, anyway, go on. So
what I mean is, but you can't. So you put a stop to that pipe dream. But actually, if you came to me, I'd have said, if you want that, we can't stay with Halifax, but we can take you to NatWest. 100% of the time, it happens. There's always an option. It might be, but not yet though. You know, when you get that new pay rise, or when that car's paid off, or when this, So it's got one of them where you get full advice from us. And do you know what? Speak to us 7 months out. Stay with your same lender. You've done your homework, and I'd hope you'd say, for all I didn't use Paddy because I had too big of a deal to turn down on the other option, direct route. He was bloody good, and let's use his company.
And you're on there. So you've made that initial call, and you know that come 2 years' time, you go back and do the process again.
Crazy, isn't it?
It is. No, I think it's important because 7 months is a long time. A lot of things can change in 7 months.
It's almost annoying that it's. So it's September. September.
Yeah,
if your mortgage is due in September,
in effect, I could come and see you, or touch base 7 months before. When I touch base with you, the missus is only a month and a half, 2 months off dropping a kid. It could be. Do you know what I mean? There's that much of a life change could happen within that time.
Well, just simple things like we do plan for that. We talk about in 7 months when would think, because your kid could be out of nursery into education, and you're saving yourself 600 quid a month in childcare. So loads of things, but we plan ahead for that.
If you're leaving it till thelastminute.com, then you have a missus who's ready to, not far off giving birth, and then you're having to do all this. 7 months in advance. And
you'll probably have the fear of, oh my God, we're on maternity pay and blah, blah, blah. But actually, and that's another podcast, it doesn't matter. But what it is about preparing.
Yeah, of course it is.
Makes my life easier, but also you don't feel like I'm letting people down. If people turn up, and this happens on purchases. I've seen a house, going to view it tonight, 2 other people are viewing it, I want it, can I have a mortgage in principle? Nice to meet you. My name's Patrick. You've just told us how I can help you. I can book you in Wednesday next week because we're rammed.
Don't wait until you found the perfect property before you find a mortgage.
I'm sure there was a podcast, wasn't there? That was episode.
It was. Probably 12.
Just say a few more. Say a few more, and then you can edit it.
I think it's good. Again, it's working for both the customer and making your life better, and it makes you more likely to
talk about being prepared. This one we're running up to 43 minutes 43 seconds. We said 45 because we've both got kids to pick up,
stuff to do.
And what we need to really both give a pledge to is one was our friendship. We need to get more, get together with the kids more, but also maybe have a beer now and again. And then the other one was to do these more regularly. Yeah. And I think
it's been good. We always knew that Christmas things.
But let's do them more regularly because they don't have to be as long. They're very useful. We can take snippets from them. And this is on a subject that matters because I'm doing a blog. We're doing a short. The kids have already done the TikTok. And I'm trying to harp it across in different mediums so that people can get the point. And a customer did respond on the poll, and they said 7 because I listened to your TikTok. And I went, top student, well done. That was Dave Rice, good lad. But yeah, that was good. Good to get back in the seat,
Yeah,
Baz.
brilliant.
How do you like the new podcast seat?
Love it. It's if there is any creaking, it's not my bones. It's a nice, lovely leather armchair that I'm sat in. Yeah, good, very good. I think
Nice one. So we're
it's been
gonna
good. We do. Yeah,
we'll have another one, and then at least you get to prepare your 3
yeah.
questions off the
And
back
get
of this.
in touch if you've got anything that you would like us to
Talk about, yeah.
Myth
Like
bust?
do
No,
myth,
bust,
aye, like
debunk.
myth bust, aye.
Myth bust, yeah.
And today we weren't joined by Alice because we're too
No.
busy, and Alice is actually smashing the applications out. But
She is.
we were accompanied by the essence of confidence today in my new incense burner, which Baz is very jealous of.
Yeah, it's strong.
So if Baz
You
seemed a
got
little
the
bit,
more unusual.
yeah.
No, it's good. It's been good. It's been a nice little mellow.
No, it's
atmosphere.
good,
It's
aye.
good.
Good. Cool. Right, we shall see you next week for episode 19.
Well, I think it could be 20, but yes, I'll check. Take care, everyone, and we'll speak to you soon.
Laters. Bye-bye.